Good afternoon, morning, and good evening, folks. Look, this is going to be a video how to increase your probability, and you can use the examples I use in your trading, how we wait for certain things to happen before we do certain things. Very vague, I know, but I'm going to dive into it in the charts. So how do we increase our win rate? How do we increase the probability of our trades? Well, basically, it's waiting for breaks of structure. Now, a lot of you are going to click off, but hold with me, because waiting for the break of structures and waiting for a valid retest and a candle, an entry candle that you wait for it to close is going to dramatically increase your win rate. So I'm going to go through a couple examples here on sort of how we would do it and how we would look for certain things using my personal strategy, but feel free to use this sort of similar sort of thing in your strategy as well. So without further ado, we're looking at the chart now. Now I will clarify, as I do clarify in every single video, the red signifies Asia session and London session. I'm only interested in the support and resistance zones they make. Other than that, I do not care for them. If I'm trading US session, I'm only going to use the beige candles, and I only use the previous highs and lows of previous US session zones. So that's basically how I get my zones. I just make London session and Asia session one color, make US session another color. It makes going back and getting some zones so much easier than looking at the time, marking out, oh, would this be Asia session, would this be London session? So to clarify what you're seeing on your screen, that is what it is. So in this scenario, what would we look for? We'd open the charts and we'd be like, okay, well, we're trading gold. We only trade gold in US session, therefore I am only interested in looking at the US session zones. So what do? What do? We get our tool and we say, okay, well, what zones can we use here? We say, well, we can use this high here. And if we break this high here and always draw from the top of the bodies to the top of the wicks, and the bottom of the zones from the bottom of the body to the bottom of the wick. That's how we get our entries. If we don't get a tap in, then we do not take the trade. And we can say, well, look, realistically, as well, if we draw down this one just to be aware of it, we can say, look, if we break below here, get a retest in, ideally, price is very bearish, and we're going to essentially see some continuation to the downside. In this scenario, you'd be aware of this, and you'd maybe be like, okay, well, I don't want to get an entry off this zone that I'm highlighting here. You'd wait again for a retest into this low to then confirm that price really is going to the downside. And it's these sort of zones that you need to know and you need to be aware of, just so you can look at the market and say, look, if price is going to do this, I really kind of am edged to do that. So you would never be buying from this zone. If price came down here in London session and then we broke up and then we got a tap in, that is when you can start using the bias flip, and you can start getting some buys to the upside, because then you can argue, well, look, we might be selling off, but we've just broken structure to the upside. We're in US session, for example, and we had a break and retest. We got our 5-minute engulfing entry candle, so all our plan has been hit. Therefore, we just now need to find targets, and we need to ride out the trade. So that's what we'd be looking for if we were looking for sells. If we were looking for buys, we wouldn't buy off this zone here, because you can see Asia and London session has created these lows here. So we can say, well, if we're going to break these, ideally, I don't really want to see buys from this area because we've already broken structure to the downside. So we'd ideally wait for a break to catch some sells, as I went through the example there. So for me, this zone would never be a buying zone because of the structure that was made here. So if US session broke all the way down here and gave us a tap back in, that is not going to be an indication for me to buy. I want to see a break of structure to the high side if I'm going to be looking for buys. Just as much if we get a break of structure to the low side, I want to be looking for sells. So that is why I wouldn't be looking for buys from this zone. It would be different if we had, let's say, London session opened here and created some sort of price action, and then US session tapped into here, broke above, and then we can form some structure to the upside. But the general consensus is you do not want to be buying when structure has broken to the low. You want to wait for a significant structure point to break. For example, in our situation, we use US highs and lows. We wait for one of them to break. We wait for a retest in. We wait for a 5-minute engulfing candle to then take price to the upside. And then we can then get take profit zones from the previous US sessions that have happened as well. So if we jump to the 5-minute time frame, we're going to see if we can get an entry. Now, in this scenario, before I do so, in terms of marking out take profit zones, as I just said, it's literally US highs. US highs and lows is what you would target. For example, 24th of September, created this high here. You do it from top of the bodies to the top of the wicks, and that would be your target. And you could say, okay, well, we also have this high here. Don't get carried away. You've got to be realistic with yourself. You've got to think, well, is price realistically going to push all this way up? It could, but if you're going to be true to yourself, the chances of that happening, you got to weigh out the odds. So yes, you could ride the trade up, and yes, you could manage the trade as you're in it. But if you're just going to set a take profit and leave it, be responsible with your take profit targets. Don't aim for the moon. Same with your stop loss. Don't have it too low where your risk to reward, you're not even making 1%. But don't have it too high either where you're trying to get such a great trade, sort of making 8% in one trade, because the likely chance is you're going to get stopped out a lot of the time. So have reasonable stop losses. So if we jump to the 5-minute, we sort of have a general idea of what we're going to be looking for and how we can sort of grab an entry. Now, I haven't actually jumped to the 5-minute and see if we can get an entry off this. However, we're going to be playing out basically as it would. So we had a break above and we had a retest in. Now, in this scenario, you have to look at it a different way. Because we have this huge candle here, this huge sort of imbalance, then we'd wait for a pattern like that to form. It might not make sense, but if we wait for a little pattern, for example, like this, then I want to be in. So one candle here, another candle here. We are not going to wait for an engulfing candle in this situation, simply because then the risk to reward, let's say we get an engulfing candle here, it's 0.6, and that's not even with an accurate drawing. So hopefully we get an example of kind of what I'm talking about here, just so it makes a little bit more sense. So if we play price on again, yeah, okay, so we have our candle here. We're simply going to wait for another one like this, if that makes sense. So we're going to wait for another one to close like that. It doesn't have to engulf. If the next candle does engulf this bearish candle here, then like I say, I'm not going to be in because the risk to reward just simply isn't worth it for me. So if we just play price on again, what do we get? Again, that's not a realistic candle that I want to be in. We saw the selling, we got rejected, but I want to see a break above here and a close above this previous candle here when we do have this big bearish candle right here. So again, we wait. Haven't got an entry, haven't got an entry, haven't got an entry. Now in this scenario, this candle is closed here. You wouldn't get an entry. Using the strategy, you can look at this and be like, is this a clean setup? And I think you can look at this, and it doesn't take a genius to say, well, it's not exactly like, let's say this pattern happened, for example. Let's say this formed. That is a clean setup. That would be like, oh, perfect, let's get in. This mess is not clean. If you guys are seeing this and thinking, well, technically we're broken above the zone, we got to tap back in, and now we're kind of just dancing around a little bit, but we did get this break above with this candle. If you're still looking at this and thinking it's going to be a clean setup, then fair enough. But me personally, with my experience, I'm going to look at this and say, you know what? I'm not even going to trade that. If we get a further break up, a tap in, and then another reaction, but a cleaner one, then yes, I will be in. Same if we break this zone here and get a tap back in, a clean reaction to the upside, then I'll take it all the way to this zone here. So let's just play price along here, and let's just see kind of what it does. So Yes, you could say, okay, well, look, now we form this, and this is basically, these two candles here are what we were looking for. If we got this reaction from the zone straight away, then I would be in. But because price decided to just dance around a little bit and do a whole lot of nothing, I wouldn't be in, because that to me isn't clean, that isn't nice, and that's not a trade I want to be in. Plus, we're going to get into this, the risk to reward, again, below the zone, below the bodies, and below the wicks when you're setting your stop loss. And your first take profit would be a 0.7. So you could ask yourself, is the trade even worth taking? Probably not. If you're going to ride it all the way up here, then fantastic. But you got to think that you have to be at least break even at this point. Because if you're not break even at this point, and we've marked out this zone as an area of interest that price could potentially reverse from, and you haven't moved to break even when you've moved that and you get stopped out, you got to think to yourself, well, who's to blame here? So ideally, yes, you could have it up here and be like, okay, look, I'm going to take a break even if we tap into this zone, because the likelihood is of price reversing can be quite high, as we've seen in my previous video beforehand. Anyway, we are going to play price on, and in this case, we do just push up and up and up, but we do not hit take profits. So we don't hit take profit, but you can see how these zones kind of react to each other. So trading US session, you use previous US session highs and lows. You can see how price constantly reacts off them. So just make sure that you have your entry and have rules. I'm seeing this and I'm saying that's not clean for me, I don't want to be in. Other people might see it and be like, well, price is holding, I want to be in. So it's up to you to kind of get your own idea and get your own experience in the market. And that's the only way you're going to be profitable, by having these experiences and doing it over and over and over again. Keep losing, keep losing, keep losing, keep losing. Eventually it will flip. Eventually it'll flip. People have done it in the past. People will continue to do it. So just make sure that you're learning from your mistakes, and you can analyze the market and be like, is this a clean setup? Yes. Or is this a clean setup? No. Do I want to be in it? Yes. Do I want to be in it? No. One example in this, just because I don't want it to be too long, I don't want to bore you to death, but I will revisit it. Let's just call it part 1. And we're going to revisit it and we're going to give more